Hello, this is Nataraja back for the weekly mutual fund analysis, which is the top 50 mutual fund analysis. Last week we did a special report, and this week, as anticipated, mutual funds have done very well. So let us get on with the report. So if you look at the summary of mutual fund performance, equity funds have done very well. Monthly leaders did 4.84% gain for the week. Annual leaders did 4.21% lead. This is the top 50. Now the overall mutual fund from equity 2.42%. So as a result, even the annual gains are looking better. Monthly leaders gave an annual gain of 64.28%. Annual leaders gave 81.53%. So crossing 80 this time. And overall equity space has an annual gain of 42.62%. So basically this reconfirms your faith in Indian mutual funds as an investment. Let me not talk about debt funds. Hybrid funds also did well. They have recovered the top 50s record above 2%, and on average, the 218 funds gave a weekly return of 1.25%. So the annual return, monthly leaders 32.93%, annual leaders 36.14%, and overall hybrid funds 22.51%. Commodities, it's a bad news. Commodities again went through correction. So their overall monthly return is only 1.18%, but annual gain is 20.03 because of the perk up that happened in the last three months. Now, let us look at the monthly gain. See, let's come to equity funds, 81.53% annual gain of the top 50, right? So if you divide this by 12, this comes to around 7%. But this month, it is 10.52%. Basically, last 1 month, the equity funds have perked up. And if you divide that 7% by 4 weeks, it is around 2%. But it is 4.21%. So things have been bullish in the market, whether it is equity funds or hybrid funds. So that also reflects in the overall fund performance. All funds average is 28.13%, which includes debt funds also and commodity funds. So there is no reason why one should aim above 30% annual return in mutual funds, because across all kind of funds, it is 28.13% annual gain. Again, if you notice here, the top 50 across all funds is same as the equity funds. That is because the top 50 across all funds types is same as equity funds. They're all filled with equity funds. So that is the message. So that means equities are back in the game and they're very bullish. So let us focus on the top 50 leaders within equity, which are also the top 50 leaders across all fund types. Now, let me also explain something which I might not have explained very well. When I explain this top 50 is like a list of distinctions. Then what I mark as green are the ones within this distinction list having above average return in each timeline from 1 month to 1 year, which is marked in bold. So if a particular fund has above average consistent return across 1 month to 1 year, then it gets marked green. So basically, it kind of tells you the consistency of performance. So the folks who are marked in green are kind of rank holders. The people who are marked in yellow are also rank holders, but they are not consistent rank holders. They are the new rank holders because they don't have data for beyond 3 months. Okay. So rather beyond 1 month sometimes. If it is 3 months, I take it good enough as consistency. So let us look at the one in the green, which are more preferable for new investments. HDFC Defense Fund, if you notice, last week it gave 10.8% gain. The monthly gain went up to 23.15 and annual gain became the topmost 133.14%. So it is still investment worthy. HSBC Infrastructure Fund, 16.46% for the month. LIC MF Infrastructure Fund, 15.89% for the month. UNESCO India Infrastructure Fund, 14.31% for the month. UNESCO India PSC Equity Fund, 14.01%. The new rank holders who are because of new funds, Motilal Oswal Nifty Realty ETF, 18.17. HDFC Nifty Realty Index Fund, 18.11. Tata Nifty Realty Index Fund, 17.59. Canara Robeco Manufacturing Fund, 14.33. So there is a renewed interest on realty index-based funds and manufacturing funds. Now, last week's report, we had marked certain funds as rank holders, and they may not be rank holders this time. It doesn't mean that your investment last week went waste. For example, last week, we might have talked about Axis Manufacturing Fund. I'm sure it is somewhere here. See, Axis India Manufacturing Fund still gave 4.56% return for the week and 12.92% for the month, and the 3 months return is 26.29%. So, since we are doing this report on a weekly basis, but we track for the last 1 month as well as last 1 week and different other timelines, it gives you a very good perspective as to how the leadership of performance changes. And what it means is that you can also spend some time on the rest of the rows here who are distinction holders, because you may want to go with certain distinction holders, though they are not rank holders. So basically you look at it for certain patterns of leadership. Okay, so if I look at auto ETFs are there, then mid cap 150 quality 50 ETFs are there, then power and infra definitely there, certain small cap and mid cap funds are there. So mid cap and small cap revival is happening. So that is a good news if you are holding them already. But should you make fresh investment is a subjective question, because you do have funds which are going better than them. So you can continue, but the analysis of this is who is the better performer nowadays. This analysis not to tell you what should be your investment. So that distinction, I hope you get it. Now let us look at the top 50 annual leaders, which are again equity top 50 annual leaders. So the ones that are in green are HDFC Defense Fund, UNESCO India PSC Equity Fund, Bandhan Infrastructure Fund, LIC MF Infrastructure Fund, UNESCO India Infrastructure Fund, Nippon India Power and Infra Fund, DSP India Tiger Fund. Okay, so DSP India Tiger Fund did not make it a monthly list because it has slightly subdued monthly return, but as an annual top 50, it is still holding its position as a consistent performer. So if you have been investing in this DSP India Tiger Fund regularly, you are proven right, is the message here. Now let us look at the other distinction holders in this top 50. What kind of pattern we see? We see Franklin Build India Fund, certain mid-cap fund like Quant Mid-Cap Fund, Canara Robeco Infrastructure Fund, and let us see the top ones which kind of missed the green distinction, which is CPSE ETF. No, it did recover for the week and it did well for the month, but not as good as other funds. So its consistency kind of diminished for the last for a short period. So it is still a good performer is the message here. Similarly, SBI PSU fund is still a good performer. Other ones are Aditya Birla Sun Life PSU Equity Fund, Motilal Oswal S&P BSE Enhanced Value ETF. Motilal Oswal S&P BSE Enhanced Value Index Fund, UTI Nifty 500 Value 50 Index Fund, ICICI Prudential PSU equity fund. So the perspective changes depending on whether you have already made investment and holding versus you are bringing a fresh investment. So the message is when you are bringing a fresh investment, go with the rank holders, though there are certain distinction holders you can keep in mind because they may pop in the future reports because there is so much competition for performance here and we are highlighting. Say JM Mid Cap Fund is something which is popular among mid cap fund, gave 5.1%, weekly return, 10.12% monthly return, but its consistency of performance is bit subpar within the top 50, right? Let us look at this one, Tata Infrastructure Fund. It has done well monthly basis, 3 months basis, 6 months basis. It is slightly lagging on the annual basis. So it is picking up. So maybe in another 1 or 2 weeks, it may get a green distinction. So the message here is also look at the rest of the distinction holders in the top 50. We are moving on to hybrid funds. Hybrid funds are again done well both on a weekly and a monthly basis. The one in green are UNESCO India Aggressive Hybrid Fund, HSBC Aggressive Hybrid Fund, JM Aggressive Hybrid Fund, Kotak Equity Hybrid Fund, ICICI Prudential Retirement Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Child Care Fund, HSBC Multi Asset Allocation Fund, Union Retirement Fund, SBI Magnum Children's Benefit Fund, Aditya Birla Sun Life Financial Planning Fund of Fund, Axis Retirement Savings Fund Dynamic Plan, Aditya Birla Sun Life Multi-Index Fund. We had a special bulletin on the hybrid funds. So now you are aware that the top 50 of hybrid funds will be always filled with the top performing type hybrid funds, which are typically aggressive hybrid funds or multi allocations fund or dynamic allocation funds. So the weekly report will not do much justice for conservative hybrid funds. Keep that in mind. That is more of a disclaimer. So now among the monthly top 50, highest annual return among the green ones is the JM Aggressive Hybrid Fund at 60.19%. Let us go to hybrid funds annual leaders. Here JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Retirement Fund, Hybrid Aggressive Plan, ICICI Prudential Child Care Fund, Gift Plan, SBI Magnum Children Benefit Fund, UNESCO India Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund, Mahindra Manulife Aggressive Hybrid Fund. See, the top one, which is the Quant Dynamic Asset Allocation Fund, did not get the green distinction as a rank holder because it had a slightly below average performance on a monthly basis. So other funds have done better than that. So that's why it lost out, but it is still a good investment, is the message here. Lastly, I'm talking about commodities here. Commodities, you can see that on a weekly basis, they are corrected significantly. On a monthly basis, there is a kind of a divergence. Some funds survived with a plus, performance, and some have negative performance. So the overall leaders from a consistent performance basis, UTI Silver ETF, FOF, Axis Silver FOF, HDFC Silver ETF FOF, ICICI Prudential Silver ETF FOF, Tata Silver ETF, Tata Silver ETF FOF, ICICI Prudential Silver ETF, DSP Silver ETF, Kotak Silver ETF, Nippon India Silver ETF, Edelweiss Silver ETF, Mirae Asset Silver ETF, UTI Silver ETF. As I said before, commodity funds, you should treat them as a replacement for fixed deposit. Fixed deposit may give you 8% for a long-term basis. Here, the commodity funds have achieved 20% on average annual return. However, going forward, the commodity funds are likely to cool off because commodity funds perk up because of the perk up of commodity prices. And in Indian context, commodity funds are pretty much gold or silver funds. So it is all about gold and silver prices. While gold and silver prices may stay up, the delta performance in the remaining part of the year is going to be justified only if there is a more of a war risk situation or more of a inflation. Now, if you notice, there has been some satisfactory news coming from US context that the inflation is under control, right? Even the war situation is kind of under control. So, because the commodities have perked up, they may seek some correction going forward. So, personally, I had made some commodity fund investments and benefited in the last 3 months. I have actually sold all of them because not because my faith in commodity funds is completely gone. It is not the reason. I did those investments as a replacement to fixed deposit. But now I am feeling more confident that that commodity fund investment can move to equity now because I am far more confident about the Indian equities because the political stability has been reconfirmed. The budget session is coming up in July. New quarterly results season is coming in July. So things are looking up slow and steady. So I would move all this money held up by commodity funds and I have moved it to equity fund investment. So this week, the fresh investments I can make in equity funds, which comes from the disposal of commodity funds. So so that is a good news for me. So once portfolio management and investment decisions are one's own and it is based on individual context and individual portfolio, I'm just sharing it because I might have pumped you so much about commodity funds. I should warn you that commodity funds risk and reward equation is kind of 1:1 at the best is my assessment. So that comes to the brings to the end of our weekly analysis bulletin. So see you next week. Again, as the market situation warrants, I will come up with special mutual fund reports, especially if some of you need special insights, just get back to me and I will take care of that. And have a best week ahead. Thank you.